Welcome back. Our final presentation is COVID-19 and Single Audits, Part 2, presented by Trevor Brown. As a reminder, this session will have 3 polling questions. Attendees must respond to these polling questions within the allotted time in order to receive CPE credit for the presentation. If you encounter any issues responding to the polls, please send your answer in the question pane and we will document them for your CPE credit. Credits will only be earned for sessions attended in their entirety. With that, I'd like to welcome Trevor.
Thank you, Laura. I hope everyone is back from checking their email or reading their article about the Fed raising rates at historical levels. It's going to be interesting to see what happens in the stock market. I also realize that I am the last session preventing you from the end of your day, so hopefully we can cover some interesting continuation of the topic that Catherine has started for us. And so we'll just kind of dive right into part 2. The first thing I want to do, though, is maybe introduce myself a little bit. So my name's Trevor Brown. I'm a senior manager in our audit and assurance practice here at PYA, primarily serving the healthcare and nonprofit industries, though do dabble in basically anything that could need financial services from our firm. So handle a lot of different things. One of those has always been single audits or uniform guidance audits, though they have not been as prevalent as they have been this past year and going forward due to the federal dollars that came out of a lot of the legislation that occurred due to COVID-19, which is what we're going to talk about a little bit. So let's dive right into our agenda here. First thing we're going to go over is the SEFA, the Schedule of Expenditures of Federal Awards, and the elements that are related to that. Catherine kind of went over a brief overview of those elements. We're going to dive deeply into some of these things and why they matter and ways to make them accurate and ensure that we're doing them appropriately and preparing them properly. We'll then talk about specifically the grant funding called Provider Relief Funding, which I'm sure many of you on this webinar today have had received at some point in time within the past 2 years. We'll then talk about a somewhat unique circumstance, which is what if I'm a for-profit entity? You know, uniform guidance or single audits might be fairly common for nonprofits and governmental entities, but for a for-profit entity to receive federal funding, most likely that was not happening that much in the past for your organization. So we'll talk about what we can do there. And then also, hopefully, would be helpful is to just go over some common deficiency types that we see as an audit firm in single audits. What is something that we typically come across? So let's start off with the Schedule of Federal Expenditures. Put simply, it's the main schedule of the Uniform Guidance Audit Report, often called SEFA, which is typically pronounced SEFA. If you're into pronouncing acronyms, that's what I'll refer to it as going forward, is the SEFA. Typically, in a Uniform Guidance Audit Report, there are 2 required sections. The first section is the financial section, which is essentially your audited financial statements, which includes the auditor's opinion, your basic financial statements, any notes and disclosures related to those financial statements. And then there's something called the Internal Control and Compliance section. And it is in that section where we find the SEFA. And among other elements that we'll get into. There can often be a third section, which is actually at the very front, called the introductory section, depending on what state you reside in. Your state may have different qualities that are required to be reported there, such as a list of board of directors or management officials, which is the one that's required for the state of Tennessee. So a lot of our clients here in Tennessee do have that, whereas other states do not necessarily require that. The SEFA contains a variety of attributes of federal grants, for the period reported on. So it's essentially going to show here's how much expenditure of federal awards we had by grant, by department. We'll see an example here in a minute. It also has its own set of notes. So in that internal control and compliance section, you're going to have the table, which is your CFA. Then you'll have notes to that CFA. There are certain required notes. We'll get into that. And then there's also, any sort of note that could be related to any one grant that you have. Could be one-off disclosures that you all or your auditors believe are necessary to report. I'll also say that there could be a second table in that internal control and compliance section, depending on the type of funding that your organization receives, often called the SESFA. So these are similar acronyms, but and similar tables, to be honest. The SESFA is the Schedule of Expenditures of State Awards. Sorry, Schedule of Expenditures of State and Financial Assistance. So that's what the FA stands for, is financial assistance. So that could be if you receive money not from the federal government, but from the state government. That's where you would report the expenditures there, and that goes in a separate table. You could combine these tables into one, and you would have to change the title of your table to explain exactly what has been combined and make sure that your table is meeting all the requirements for the single audit and also all the requirements that your state requires, depending on where your organization resides in. So here's just a brief example of what a CFA would look like. So you can see it's essentially a list, and this is a relatively short one. I took it as an example and kind of combed it down so it could fit on one slide. Often these tables will be longer than one page, and may have way more subtotals than you're seeing here. But you essentially get a list of all the federal awards listed by their number, showing their expenditures over to the right and then totaling down to the bottom to get to a total expenditures of federal awards. That's the goal of this schedule here. So one thing I want to talk about is what makes a good CFA. And I say good, I think the term I'm wanting to come across there is accurate. Because as an auditor, one of the things we are required to do is to receive this table from our client, maybe not formatted in the exact correct way, but the information, receive this information, and then develop our audit process to go through the audits of the major awards that are listed here. And so how do we know that, or how as a client in your all shoes, how can we make sure that this table is as accurate as possible when we hand it over to the auditors for the audit? And the first thing is really creating a diligent process for accumulating the accurate data elements. And we'll go through a list of questions here in a minute that can help us do that. It's understanding that this table does have a lot of numbers on it, but you'll notice it also has a lot of words on it and a lot of attributes that are not necessarily tied to expenditures, and all of those are required elements that you're seeing on the screen here. So we have to make sure that not just the number of the award expended is correct, but also all of the other attributes. So knowing that it's the descriptive elements we need to be tracking as well. Knowing that we have agreements and award documents for each award we receive, that we're keeping track of those, that we're reviewing those, that we are reconciling those to the schedule, that we understand when amendments occur to these agreements, which is very common, that we have maybe a single place in our system or filing or on the cloud, whatever your organization chooses to use, that is organizing these in a fashion that can be easily handled. That we are having supporting financial records for the numbers. So those numbers that do appear on this table, they obviously are coming from somewhere. So what is the process for how we're providing reports that create those numbers, that reconcile to these numbers, that we understand any of the reconciling items that are occurring there. that we are providing ourselves with some updated knowledge each year about the programs we are awarded. Each program issued by the federal government is unique. They all have different requirements. They all have different things that are important within them. Some of them have different reporting requirements, which we'll get into specifically on provider relief funds. So it's not necessarily something we can just teach ourselves this year and then ignore for the next 5 years, because there's going to be constantly new information coming out and things changing on these year over year that we do need to update ourselves on. It's also something that only occurs once a year, so providing an annual updated knowledge of it makes sense. It's not something we're regularly practicing throughout the year, so getting some training on it every so often is important. And then the last thing is just making sure that there is some sort of quality review, that the development of the schedule does not take place in one person by one person and no one's reviewing it or anything like that. So just implementing a quality review of the document would be helpful as well. So what we've done here is come up with what I think are some helpful questions to ask for each item, each line on your CFA. And hopefully many of you are at least touching the CFA at some point, but a lot of these are things that you wouldn't necessarily think to ask. You think normally with federal expenditures, I'm just worried about what's the amount we spent. That's the number I need to worry about. But there's a lot of other stuff that are more descriptive or attributes about the grant that we need to know. So here are some questions that are important to ask. The first is, what type of federal assistance is this? And by type, I mean, is this money that we are being reimbursed for expenses we've already paid for on our own? Is this money that we have received and we are spending out of a certain account and we have to track that separately? Is this money that is structured more like a loan from the government that ultimately gets paid back or forgiven? Saw that with PPP loans the past recent times. Is this money that we are required to match? Oftentimes, federal assistance can come in the form of, we will give you $1 million, and as long as you prove that you have spent $2 million on it. In other words, you've matched our $1 million on this program. Second thing is, what is the assistance listing number? Oftentimes, federal money comes to your organization through the state. So you're receiving federal dollars, but the grant document you're receiving related to that federal dollars is actually a state grant document. And there will be times where that information on that state document is not complete or accurate. So we need to always be aware of what is the federal assistance listing number. Every single federal award, I should caveat that, 98% of federal awards will have what is called an assistance listing number. This used to be called, until last year, a CFDA number. It is now referred to as assistance listing number. And we'll dive into those in a little bit, but there will be times where it's not listed on the grant documents. We need to be aware of, when there is a federal grant, there should be an assistance listing number. You can Google these numbers. You can Google the grant names and find the numbers. They are online on sam.gov, relatively easy to find, so that's something to make sure we're tracking. Next is the name of the federal program. Oftentimes internally, your organization may have maybe more of a casual name you're referring to the grant, or the state may call it something different than the federal government. Well, for the federal single audit report, the actual name listed on the CFA needs to be the official name so that it's trackable by the organization that is receiving these reports on the Federal Audit Clearinghouse. The next is related to the assistance listing number, is the prefix of that number aligned with the federal agency. So not only do you need to know it, but you need to know that it's accurate. And every single federal agency has a specific prefix number. So for instance, the Department of Health and Human Services is 93. So any federal award from that department will start with 93, and we'll see that when we get into some of the details here in a minute. Is the award part of a cluster? And if so, what is that cluster's name? So on your CFA, if there is a cluster of awards, which a cluster is a group of awards that have similar compliance requirements and similar goals, and they are to be treated as one grant. So you may receive 2 grants, they're part of one cluster. That cluster is treated as essentially one grant for the purposes of this audit. So we need to know that in advance so we can group those together. The next thing I would ask is, what is the award number? That is going to be different than the assistance listing number. Most likely the award document you receive, the grant document you receive from the state or from the federal government will have a specific award number that is being tracked there, and that's the number we're looking for to put on the CFA. How much was awarded? That is not the number on the CFA, but I think it's important to track so that you know how much you have to spend, especially if it's a multi-year award. For instance, you may be awarded $1 million, and in year 1, you may spend 400,000 of that. And the 400,000, because it's your expenditure, is what shows up on the CFA. And if you're not tracking the next year that you were awarded $1 million, let's say next year you spend 700,000. If you're not tracking that you were only awarded $1 million and you've already spent 400,000, you wouldn't maybe catch that you've overspent on that grant. So I think it's important to track how much was awarded, and also be aware that there could be an amendment. Also, you want to know, like, what is the award period? So oftentimes these will align with your year end, which would be easy, but most of the time they are on a state year end, which may be different than yours, or they may have a random year end, or maybe even a shorter period than that. It's for expenditures during this period, or for multiple years, may go over a long timeline. So understanding that. Knowing if it's a direct or sub-award. A direct award would be an award that's coming directly from the federal government. Sub-award would be something that's coming from typically the state, but I guess could be from any other source other than the federal government. Knowing who that pass-through entity is. So if it is a sub-award, you need to be reporting where you received it from. Oftentimes it's a department of your state government. And then also, because the federal award may have a certain period, that goes down to, let's say, the state of Tennessee. The state of Tennessee may then send out an award to a hospital and may further restrict that period. So we need to know what is the actual period that we are required to follow, which would be the sub-award period. Some more to ask. Are we passing any of these dollars on to a subrecipient? So is someone else receiving a sub-award from us? That could happen maybe if your organization is managing a project that's being paid for by federal dollars, but it's a collaborative project that is featuring other organizations in your community. This has happened in many disaster preparation grants, where maybe one organization is receiving all the money and then managing the project, but they're sending those dollars out into the community. So you would need to track how much you're sending out to subrecipients, and also track the process of how you are monitoring those subrecipients and how they're using the grant dollars. As I mentioned, is it a matching amount from the state or from the federal government? Does it include any non-cash assistance? Most of the time we're talking about dollars coming in to your organization, but it could be physical equipment that's being contributed by the federal government, something like that. So we need to be aware of that. Is it a loan or a loan guarantee? Those are treated differently. Is it related to R&D, research and development activities? Those are also treated differently. Because of COVID-19, your CFA is required to indicate on the CFA which grants are considered a COVID-19 grant by having the words COVID-19 in front of the grant name. So that's something we have to indicate on the CFA going forward. So you need to know if it is a COVID-19 grant, which obviously provider relief funds would be, but there were lots of other grants that came out that we would need to know to indicate there. And then if there are any other unique requirements in the award agreement. So reading those agreements, understanding what you're required to do as an organization. We definitely need to read each of those agreements and track who's responsible for doing what. Some things to ask that are maybe not necessarily tied directly to what shows up on the CFA, but are important in terms of making sure that information is accurate, would be who is the main external contact person for this award. So you may be receiving this money and you're dealing with somebody at your state level or state governmental department. Knowing who that is and tracking who that is so that you can make sure that if there are questions that you have or problems you're having with the grant, that you can reach out to them and they can provide you that information. And then also knowing who internally is responsible for tracking that grant and monitoring the progress of that grant and making sure that all the requirements are being met. Sometimes that can be one person looking at all grants for an entity, and other times these grants are kind of covering multiple different departments at your organization. So knowing who's doing what for each grant is very important. Obviously, the main number on the CFA is going to be how much was expended during the year. Not to be confused with how much was received. That number is not always equal. So it's how much was expended. I will caveat that with our provider relief funding discussion that comes up here in a few minutes. And then knowing what are the relevant compliance requirements. So Catherine talked about the compliance supplement, which comes out annually. That is a very large read if you are very into this topic, but I encourage you for your individual programs you have, for your assistance listing numbers that you do have, to go through and look at the compliance requirements that compliance supplement is saying are relevant for your program. That will help you determine what are the items that my auditor is going to be looking at when they come in and audit this as a federal program. And how can we prepare, make sure we have the right information, got all our bases covered there. That brings me to polling question number 1.
Thank you. Our first polling question is, how well trained is your staff regarding CFA preparation? Excellently trained, have been trained before, but could use a refresher, not trained at all, or I'm not sure. Remember, you must fill out the polling question in order to receive CPE credit. You will have 30 seconds to answer. Thank you for participating in our poll. Now I'll hand it back to Trevor.
Thank you, Laura. So some interesting results here. Kind of what I thought. I would say rarely is anyone excellently trained. So definitely expected for that to be in the minority category. But it's good to see that some are at least trained and some maybe aren't sure. Maybe they are not involved in the CFA process yet. So thank you for sharing those results. Also apologize, it is monsooning outside of my office. I'm not sure if you're picking up the rain on the microphone or not, but we will get through this and hopefully there are no power outages or anything like that. So what I want to do next is kind of an interesting exercise here, where this is a little tiny snapshot of a CFA, and at first glance everything looks great and wonderful, but I wanted to highlight a few items that right off the bat are incorrect, and we're going to go through this line by line. And if you were to look at this, many of you might see this and think, I don't initially see anything wrong with it. I think that's a fairly common response when I show this table to people. But the next slide indicates that every one of these highlighted boxes here needs to be edited or changed or removed, or some element is missing. And I'll also say there's one that's not highlighted. There's this CFDA number column header here that should now say assistance listing number. That was not updated by me, so I apologize. That is where this column is where you put your assistance listing number. So let's kind of go through what each of these errors are. So for the first line, we immediately know that the U.S. Department of Justice actually has a different header. Its prefix for its assistance list number is going to be 16. So we knew immediately that federal award number is not accurate. We need to do work on that to make that from a 12 to a 16. We also knew that this was listed as a 50% federal and 50% state grant, and we're showing that it came in at $250,000. Well, since 50% of that is federal, and this is just a CFA, just showing the federal portion, we would need to edit that down to just show $125,000. This also internally, perhaps this might have been called the VOCA fund, but actually the official name of this program is the Crime Victim Assistance Listing, so we would change the program name here. And then also, oh, nope, that was it actually. Sorry, I thought there might have been something wrong with the pass-through entity. Lastly, this is our only Department of Justice grant, and on your CFA, every single U.S. department will have its own subtotal here. So even though it's only one grant, we have to show a Department of Justice subtotal. So for the next line, the CFA, or the federal assistance listing number, is accurate, but what we find out about that number is that the federal government considers that to be a cluster program, and for any cluster program, you have to name the cluster and you have to provide a subtotal for that cluster here. So we were missing that subtotal and name. We also, when looking at the grant award, we would see that the award number was not accurate, so we needed to update that number. That's something that is commonly a mistake that we run into. Again, the name needed to be changed, and then also knowing who the actual grantor was. So this is a 93 program, which is a Department of Health and Human Services. So we would need to update this to say U.S. Department of Health and Human Services. Even though the Center for Medicaid and Medicare Services is within that department, we would still say Department of Health and Human Services there. The other thing here is right now you'll see, or your CFA will have 3 columns, I would say 3 columns for your award expenditures. One is from direct awards, one is from pass-through awards. Direct awards come directly from the federal government, which would be this column. Pass-through awards come from a pass-through grantor agency. That is then totaled here. You also would have a how much did I pass through to subrecipients. That would be a total here. So for this grant, we're receiving it from the Tennessee Department of Finance and Administration, so it does not need to be in the direct award column. It would need to be moved over to the pass-through award column. So on the next grant, what we see here is this was our last U.S. Department of Health and Human Services grant, and we therefore need a subtotal for that department, which adds up all other U.S. Department of Health and Human Service grants. We also would note that on this grant, some of this was, this was from direct award, right? There was no pass-through grantor, so we need to have this number here. But then we also passed through $250,000. That's where we get our total, where we are showing $400,000 here. That breakdown is actually $150 of direct award, $250 we have passed on to others. So that's how we break out that $400 or $400,000. Then on this last grant, we're showing it as a federal grant, Department of Treasury. Well, we know if it's a federal grant, it has an assistance listing number. So we know we're missing the assistance listing number here. We also had it labeled correctly, but we did not add the label of COVID-19 in front of it. So we needed to change the name to show that it's a COVID-19 grant. And then we also did not properly show what the pass-through grantor agency's name was. So we need to add a more accurate description and then also a subtotal there. So all of those are just minor mistakes, but are very, very common. And when a lot of these problems occur, it becomes a risk factor that your auditor's having to consider whether or not there's proper internal controls over the financial reporting and development of this schedule. Obviously, getting the numbers accurate here is very important. It's important for a couple reasons. One, it helps with what I just mentioned, the risk assessment process for the auditor, but also anytime your total federal award numbers changes, the selection that the auditor has to go through for what is a major program changes. So potentially, if we have to come back and say, actually, this was $236,000, well, that's going to change my total to $836,000 here. That may mean I have to select more grants for testing. Or that may mean that this program is now considered a type A program and is required to be tested instead of a type B program, which I can potentially not test. So all of that are things to consider there. So we've talked a lot about the CFO, kind of dove into some details there. One of the things, or many of the things that also fall into that internal control and compliance section that we talked about at the front, which is where the CFA is located, there are a lot of other things that fall into that section. Like I mentioned, it's not just the CFA. The CFA is the main table, but you may have the CESFA, the State Financial Assistance table. You may not have that. In the example we just went through, we definitely would have that because we have a grant that was 50% federal, 50% state. So that second table would show the 50% state portion of that. But there may be other grants that are entirely state grants or grants from other sources, which you would put there as well. There would be notes to the CFA, some notes that are required on every single audit, such as whether or not you're using the de minimis cost rate, whether there have been any subsequent events, what your method of accounting is for creating the table, that sort of thing. Those are required disclosures, but there may be other disclosures that are one-offs. One of those would be related to PRF funding, which we'll get into. Then you would have the auditor's report on internal control, auditor's report on compliance major programs. Those are where the auditor would list whether or not there are any significant deficiencies or material weaknesses that they've encountered, followed by the schedule of findings and question costs. Catherine went into that a little bit, and I've got an example of what that looks like here in a second. That is where the auditor would explicitly describe if there were any findings or question costs. If there were findings in the prior year, even if there were no findings in the current year, there's a summary schedule of prior audit findings and whether or not those have been remediated or corrected. Then for current findings or prior findings that have not been remediated, there would be a corrective action plan that actually is signed by management to explain how and when and who's responsible for the corrective action plan. And then one other element that is not necessarily part of this section, and it doesn't actually show up in the financial statements, but it's how this information is loaded to the federal website, which is the Federal Audit Clearinghouse. And that's called the data collection form. It's essentially an Excel/PDF version of all of these schedules and notes that then gets loaded. So here's an example, as I was saying, of the schedule of findings and question costs. Your audit, if you have one, every audit would have one of these, regardless of whether or not there is a finding. If there is not a finding, you would see a lot of no's checked here. If there is one, you would see a yes. So unfortunately, this example has a material weakness. And what it's essentially showing is what type of weakness, what type of deficiency, which programs were audited. So down here, the identification of major federal programs. Not every program on your CFA gets audited. Your auditor is required to go through a selection process, and anything that they select is considered a major program and gets listed here individually. The dollar threshold, as Catherine mentioned, for type A and type B programs is $750,000. However, that number changes depending on the level of federal funding you receive. So if federal funding is a very high number, for instance, if it goes above 100 million, I believe the dollar threshold actually jumps to 3 million here. So something to consider there is it's not always 750,000. Each auditee is considered either a low risk or a high risk auditee. That also impacts the selection process for your auditor. If you're a high risk entity, they are required to test more, get 40% coverage instead of just 20. That brings me to the provider relief section and polling question number 2.
Thank you. Our second polling question is, did the receipt of provider relief funding trigger your first single audit? We regularly receive single audits prior to the pandemic. No PRF received and no expenditure over $750,000. PRF caused my organization to have our first single audit. Remember, you must fill out the polling question in order to receive CPE credit. You will have 30 seconds to answer. Thank you for participating in our poll. Now I'll hand it back over to Trevor.
Thank you, Laura. So it looks like a little bit less than half of you were not receiving single audits prior to the pandemic. So, you know, that's pretty remarkable then that we see PRF for 30% of you caused your organization to have its first single audit. That happened to a ton of people. Your organization is not alone if that's true. All right, so let's move on. Thank you. So provider relief funding. If you're a healthcare organization, you most likely received this. And you most likely received it in mid to late 2020. However, federal guidance on the single audit implications of these federal dollars that you received was not issued until much later, over a year later, August 2021. So there was a lot of unknowns with what to do with these provider relief funds. There are still some unknowns with what to do with provider relief funds that were in some of the later periods. So Assistance listing number is 93498. That's what would show up on your CFA. There are some very unique things to consider with provider relief funds and your single audit and how it shows up on the CFA, and we'll go through those. The compliance supplement listed 4 applicable compliance requirements. They are activities allowed or unallowed, so they wanted the auditors to look at whether or not the dollars that were being assigned as expenditures, whether or not they were for activities that they allowed per the grant program, or internal costs that were allocated according to the grant program. The reporting, so I'm sure you're familiar with the portal that these provider relief funds were reported on, whether or not their reporting was done correctly. And then there was the box checked for special tests and provisions, which is a box that gets checked whenever there are unique circumstances in the grant document or in the grant regulations, because provider relief funds did not come with a grant document, that you would be required to follow. However, that was eliminated in a later version of the compliance supplement, so we can ignore that section. I will briefly show that slide. Also, the compliance requirement said these provider relief funds are considered high risk. So regardless of whether or not it was a type A or a type B program, if it was selected by your auditor, it had to be tested. It could not be shown to be a low risk program and therefore not tested by your auditor. And that was the case for a lot of COVID-19 programs. So here's a schedule you're probably familiar with. I won't spend too much time on, but it's the different periods that are labeled for provider relief funds. So the way provider relief funding works on the CFA is it's actually not based on expenditure. The timing of the expenditure is based on the timing of the receipt. So for this program, for this grant award, we need to be tracking which periods we received. Those periods are outlined here. So if it was a payment received between April 10th, 2020 and June 30th, 2020, that is a period 1 program, which your organization was allowed to use those funds all the way through June 30th, 2021, and then reported that on the portal by September 30th, 2021, though I think that was actually updated until the end of November. Same with period 2, 3, and 4 here. Period 3, the reporting of that is essentially taking place now. So your organization is probably working on that if you did receive period 3 funding. Period 4 reporting has not started yet, won't start till the beginning of next year. Same with period 5. So if you were a December 31st year end, you would have period 1 and period 2 on your CFA, because the deadline to use those funds was through December 31st, 2021. So when I say that the first compliance requirement relevant one was provider relief fund, or was activities allowed and unallowed, that was just saying that your auditor is going to be testing that the expenditures or lost revenue was related to these type of expenses. I've listed several here. There are probably others that can be added, but these are some of the specific ones that get called out. Things that are just directly related to dealing with the COVID-19 pandemic. Allowable costs. So this is more about any internal charges that are against that grant that are maybe coming from internal staff that are used, salaries, benefits, that sort of thing. Then the reporting was the reporting done timely? Was it done accurately? Is the information on that report all inclusive of what needed to be there, complete? Were the methods used for calculating those numbers an appropriate method? It actually calls out the 3 methods for calculating the lost revenues. I'm sure you're familiar with the comparing to 2019 actuals, 2020 budgeted, and then any reasonable alternative method, which I'm sure you could be creative with there. The last item was related to the special tests and provisions. has been removed, no longer tested. Though if you finished your single audit earlier in the time period, so if you happen to be an early bird and having your auditor complete this, they may have had to do this testing. This did not get eliminated until the spring of 2022, so a couple months ago. But it was related to some of the billing to out-of-network patients and how much they were billed, that sort of thing. So one of the interesting things that happened with provider relief funds was it didn't just go to nonprofits and governmental entities. It went to a lot of for-profit entities. They're not used to receiving federal dollars, and certainly not used to completing single audits. So one of the problems with that is if you're not receiving audited financial statements regularly, if you're not performing a single audit regularly, this would be a huge upfront cost all of a sudden that you have to, one, be immediately prepared for and have all of the policies and procedures in place, but also it's expensive. It's a lot of time and effort that your auditor and contractors go through to prepare for this and perform this audit. And you may be a dentist that receives PRF funding out of the blue. And so it's something that you didn't necessarily ask for. So for a long time, and really until the end of 2021, did this get issued. But there was an alternative now for for-profit entities. And examples of for-profit entities that maybe receive federal audit requirements are listed here. Some of the obvious ones: physician groups, assisted living facilities, surgery centers, vision centers, behavioral health networks, those type of things. So it impacted a lot more than just hospitals that receive federal funding. Just want to make that point. Try to advance the slides here. So there's really three options. There's always been two options for completing a single audit. You can do a full single audit, which is a financial audit and a single audit, or financial audit and a compliance audit. Or you can do a program specific audit, which is when you maybe have one major program you need tested, don't want to do a full single audit. All of those are difficult to do and still require a lot of elements that maybe your for-profit entity does not want to be involved or have reported publicly. So what happened was they created what's called the Gaggis financial audit. These are comparing all three of those and some of the attributes. For instance, for a single audit, that is applicable if you have awards under one or more programs. The program-specific audit, though, was only relevant if you only had one program. So if you had multiple type A programs, you couldn't do a program-specific audit. But the Gaggis financial audit said this one is allowed. You're allowed to do one or more HHS programs, but it did have to be specifically for HHS, like this specifically for that department, U.S. department. Single audit does not or does require a financial audit under governmental standards. Program specific and the financial audit, the Gaggis financial audit, do not. Presentation schedule, you had a full CFA for the single audit, which we went over. For a program specific audit, you had a schedule just for that specific element, just for that specific program. And then for Gaggis, you have a specific table that we'll go through here in a second. Your auditor's reports related to each of these. For single audit, you had a financial statement and a CFA opinion. But for program specific audit and Gaggis financial audit, you had just an opinion on that schedule that we're talking about. And then importantly, down here at the bottom, opinion on compliance and internal control. The answer is yes for both single audit and program specific audit, but for the Gaggis financial audit, the answer is no. So that's not part of this audit process. So let's kind of get into more of what this Gaggis financial audit is. Not a full CFA. So you're not going to have you're going to have what's called a schedule of Department of Health and Human Services awards. So if you have more than one, it's going to be all of them that fall in this department. If you just have provider relief funding, it's just going to be the one award. It's going to be under GAAP or any other special purpose framework if that's what your organization accounts for, but that whatever that framework is, you have to disclose it. There's not a specific one that's been issued in any of the regulations related to PRF funds, so anything is allowed as long as it's being disclosed here and is a reasonable method. And then you don't have any financial statements. So this report is pretty small. It doesn't have all of the financial statements and disclosures that would be part of that first section I mentioned, the financial section that's part of the single audit. Deadline to use funds here. So this is when a lot of the, based on what period you have, it's going to be the same timing for a single audit and for the Gaggis financial audit. So just kind of repeat of that table earlier. For provider relief funds, the number that's going to show as expenditures and lost revenues is going to be how it's reported during that period. So it's based on not when you recognize those as part of your GAAP financial statements, but how they, when they would be received and reported on. And then for your other, if you had other HHS programs, it's just going to be when those expenditures occurred during the period. Or for this specific one, the HRSA CAF program, it's going to be when revenue was recognized during that period. That one had a specific call out in this Gaggis documentation. So I want to walk through a quick example here in our last bit of time. So this organization, they received 3 PRF payments, period 1, 2, and 3, numbered here, and they also had some of the uninsured grant for each of these periods here. And you'll see that for GAAP purposes, the first PRF period 1 amount was recognized during 2020 because it was incurred during the year 2020. And they had all lost revenue and expenditures that equaled that amount. For your Gaggis financial statement on it though, because period 1 does not show up on the CFA until 2021, which is true for any single audit, that's showing up here on your Gaggis financial audit in 2021. For period 2, they received 1.3 million. $1 million was 2020, 300,000 was 2021, according to your GAAP financial statements. But again, period 2 shows up on your December 31st, 2021 CFA or schedule of HHS awards. And that shows up here in your Gaggis financial audit, all under 2021, not broken out by year here like it is in your GAAP financial statements. And then for period 3, that would, because period 3 is not reported on until after December 31st, 2021, that actually shows up in your 2022 financial audit. For the uninsured, this is again when based on when the revenue is recognized. For 2020, it was in 2020, but they did not meet the $750,000 threshold, so there is no reporting of this $200,000. The 130 took place in 2021 and shows up in your 2021 Gaggis financial statement because you had met the $750,000 threshold. And then same for 2022, this would show up in your Gaggis financial audit of 2022 because you had met the $750,000 threshold. Here's an example of what that table would look like in year 1. So you would show where it's being recorded according to GAAP, but you would not have one of these schedules as a 2020 Gaggis financial audit. There's no such thing as a 2020 Gaggis financial audit. This is only applicable to 2021 and beyond. So for 2021, you're gonna have 2 columns. What was recorded in 2020 under GAAP, what was recorded under 2021 under GAAP. For 2022, you'd have what was recorded under 2021 and what was recorded under 2022 GAAP. from the periods that are required to be recorded in 2022. There's lots of examples of these online. The organization can look through it. Also, our team here is working on several of these actually right now. In fact, after this call, I'll be moving over to one of those to look at and review. So this is something that is new, but also helpful and less costly for for-profit organizations. That brings us to polling question number 3.
Thank you. Our third polling question is, how smooth has your organization's single audit or Gaggis financial audit gone in the past? Extremely smooth, no issues, no headaches. Sometimes stressful, but not terrible. A source of dread every year, or I'm not sure. Remember, you must fill out the polling question in order to receive CPE credit. You will have 30 seconds to answer. Thank you for participating in our poll. Now I'll hand it back over to Trevor.
Thank you, Laura. So it's good to see it's not a source of dread for many of you, but also maybe sad to see that it's not extremely smooth with no issues, no headaches. It's certainly something that I know not a lot of people look forward to every year, but hopefully the organization can get through those smoothly going forward. So that brings us to our last slide and last topic that I just wanted to review here at the end, that I think might be a helpful takeaway as you consider how your organization can improve the single audit process. And it's just really understanding what are the most common deficiency types that we typically run into. And so real quickly, just went over 4 common types. The first one is lack of expertise regarding CFA preparation and reporting. So we spend a lot of time going over likely errors that occur on that CFA. Now, just a handful of those taking place is not necessarily what I would consider a deficiency as your auditor. However, if there are a lot of issues that are kind of prevalent throughout, and then also specifically related to the amount of expenditure that's being recorded, that would be an indicator of a deficiency. And depending on the size of that error, it could be a material weakness. So that is something we've run into a fairly common amount, just because there's not expertise on your team related to how to prepare that schedule and understanding how the numbers flow into that schedule. The second one is just inadequate internal controls over financial reporting or grant compliance. Your organization is required to have that. That's part of what the single audit is testing, and not having those policies laid out and built out, and having proper segregation of duties and reviews and that sort of thing is something that we do see sometimes. Another is not having appropriate review or risk assessment done for each grant, and an understanding of what the compliance requirements are. Each grant is very unique. There are maybe some cookie cutter awards out there that have template language that the government has used, but oftentimes there's very specific reporting done. There's very specific expense type that is allowed, very specific funding that is provided. So really an assessment has to be done on every single award and probably every year in order to be appropriately reviewing these, because this is not something that can be done just for one award and applied to everyone else. It really is something that has to be done on an individual basis. So we see errors that are a result of that sometimes. The last is just lack of documentation supporting expenditures that are reported. So I encourage you to save PDFs and documents and have those stored in certain files and organized in certain ways that can be provided to your auditors when asked. A lot of times, not a lot of times, but this is a more common one where we select a grant for testing we select certain expenditures and support is not able to be provided because and evidence of review of that support is not able to be provided just because it's not maintained. So encourage your organization to make sure there's a process for maintaining all that information. And with that, I think that brings us to the end. So I'll kick it back to Laura.
Thank you. Thanks to all our presenters. If you have any questions, their presentation and contact information will be emailed to you along with a recording of today's event. Also, if PYA can provide assistance with audit, tax, compliance, valuation, or physician services, please call or email us. You may also visit our website at pyapc.com for more details about our specific areas of expertise or to subscribe to receive PYA insights. On behalf of PYA, thank you for joining us today and have a great rest of your day. We hope that you'll join us tomorrow for day 2 of Summer CPE Symposium, What's Hot in Healthcare. Thank you.